Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Tuesday, the 25th of June, 2019. Now, the simple fact is we're getting onto the 520 time frame, so we're already behind me on the boards that have prices on them. These markets are open for the Wednesday session. I wanted to wait to see the reaction in the energies. We saw the API numbers, and they came out a net draw of over 10 million barrels. That's powerful. So a big number. We get the EIA number tomorrow morning at 9:30 a.m. Central Daylight Time. Even a 5 million draw would give a lot of credibility to the API, but did we just see where the refineries finally came back online and they need the product? Now, we realized the big gas refinery in Philadelphia isn't coming back online anytime soon. It's going to have to be made up somewhere else. But as you take a look, you're getting a little bounce in the stock market. Gold is up a little bit tonight. Currency's pretty mixed. Remember, on Friday, it sounds so far away, it's 3 days away, the beginning of the G20. And on Saturday, Presidents Trump and Xi will meet for their sit-down. Where's that going to go? If you watch today, and I watched the interview with Fed Chair Powell that took place, it was on the internet, and I was able to watch it live. The big issue that people are concerned about is trade. The world is slowing down in trade. And if the U.S. and China don't get things together, then you have to ask what happens with interest rates, what happens with the U.S. stock market, so on and so forth. This is a big weekend. So if you're going to be positioned, you've got to think really careful. What are you walking into if you guess wrong as to what takes place? And the word guess wrong is a big word, because I don't know, even if the negotiators sit down, are there preconditions? We're probably not going to find that. Will the U.S. demand that what had been in our head agreed to, we pick up from that point? Or the Chinese going to say, no, you don't. We didn't agree to that. We want the whole package. You could sit down, you could have trade negotiations that go for a couple of days, everybody saves face, and they fall apart again. You've got to be careful with this. In the stock market, in this general zone of these record highs, the market's stalling again. Sort of what it did here, sort of what it did there. That's all that I can say. The patterns on a closing basis, darn it, you can just see it. You don't need me here to tell you about that. When you take a look at the daily bar chart, you see how the market got up into that area. And I know I was telling you this area is going to be an area of resistance. I realize it made a higher high. It doesn't mean it's not resistance. And the market is slowly pulling back. This does not mean I'm bearish. It means the market is pulling back. You've got a pattern of higher lows. They're still intact, and higher highs. Therefore, I'm in the bull camp on the swing line. The other areas I look at are where's the 18, the 100, and the 200-day average. Well, they're all still in good shape below the market. You could fall there and find support. The problem is this break low I don't want taken out. And that break low was at 28.89. And when I look at where the 18-day average is, it's just above that number. It's at 28.91.5. And remember, we're already open for the evening trade of Wednesday. When I look at Bollinger Bands, we did not get strong enough to get up to that upper band. I pointed that out yesterday. And now I'm concerned that you're losing the embedded reading. Suddenly, when you open tonight, and here's the close without tonight, the market still had the embedded reading. It needs a strong rally tomorrow. If it doesn't get that, then the odds favor price and 18-day average coming together. In the NASDAQ, you did get to the upper Bollinger Band. You ran into momentum problems. You didn't get into new highs. You got into this old area of resistance. And here, too, you're losing the momentum. Does this mean we're liable to be going back to the 18-day average to neutralize everything going into the G20 meeting? It could well mean that. In the Dow, you're losing the embedded reading. You've got the pattern lower highs, lower lows, similar to the S&P. You didn't, during this time frame that you got up to these recent highs, make and get up to the upper Bollinger Band. That's a general sign of some weakness, the way that I interpret that. And in the Russell, you're all the way back to the 18-day average. Momentum down. The market is not got a trend down. It has the higher high and lower low. But this has been the weakest, and I think I've been pointing this out to you right along, that this market was not joining the other indices in terms of strength. Now in the VIX today, I'm surprised. The market had gotten down, as you know, to this lower Bollinger Band, and that's where I think the pros wrote some puts. So I think they took some money off when you hit the 100-day average. You stalled. Now if you get up to the 18, my contention is they come out of that completely, and that's pretty much what you did today. What is the trend of the market? It's up, higher lows, higher highs with an outside day up. Resistance all the way up here. We'll see what the market does from here, but so far I still contend that what the pros have been looking at, every time you're hitting the lower Bollinger Bands especially, I think they're writing puts and coming out at the 18-day average. And no, I can't prove it, but I can tell you what I'm seeing on the chart. In the T-bond market, I still look for resistance at the upper Bollinger Band. You're in an overbought condition, but you know the Fed's got the markets back if there's no trade deal. It's hard to be short these markets, is what the market keeps telling you. I was very surprised today that this high right here was taken out. And the market did take it out today, and while it backed off under the Bollinger Band, it's just a sign that even when you lose the embedded slow stochastic reading, the market, it's too powerful, too difficult to fade. In TLT, you got to the upper band and you've backed off in the market, and you're correcting an overbought condition. You're still not out of it. Both numbers are over 70. They have to get under that to give me comfort that the market's not overbought. In the dollar index, you went right down to the lower Bollinger Band and snapped right on up. I'd look and watch this area, the 96.23 to 96.42 level as a resistance point in the market. It is oversold. I think the pros came out of shorts right here. Might be a good thing to do in front of the G20. And I think that did the same thing today. In the euro, they're mirror images of each other flip-flopping. We had talked about that yesterday, that one was oversold, the other was overbought. Now the support starts coming in, as I see it, between the 100-day and the 18-day average of closes. We'll see if we can get trends from here. The British pound missed hitting the upper Bollinger Band and had a big reversal day, as you can see. So this market, I would call it now, probably ran out of upside steam. It was overbought. And you can see that coming into today. You were overbought. The question was, could you get up that high? You just missed it, and I think you now neutralize this market. I think it's going to hang around the 18-day average of closes for a little bit, but it has upside bias. In the Japanese yen, higher lows, higher highs, right into resistance at the upper Bollinger Band. The market is overbought as can be, but why not? All these markets are trying to figure out what's the impact of the G20 going to be. In Bitcoin, you still have the embedded reading. You're still running to the upside. We saw the sideways action, and we kept saying this market still has a lot of bullish things about it, and it still does. Still overall looking good. Then we get to the crude oil, and as much as the war of words between our president and that of Iran's supreme leader, with us putting on all of the brand new sanctions on him and his foreign ministers, we're still narrowing in the market. The reason crude oil's up today is not the threat of the Iranians. It's because we saw this big draw in the API number, and you're at your upper Bollinger Band on this tonight, up to the 100-day average. You are overbought. The trend has been up. Look for resistance in this general area. Same in the WTI, the upper Bollinger Band 100-day average. Look for the resistance there. Rebob got a nice draw in it, and that's popping up as summer driving is going on. I know my office, we've got a lot of people out. I know the summer driving is kicked in. Everybody's taking their vacations bright and early, and thank God for them. The weather has gotten nicer, and you're seeing that you're getting a bounce in your nat gas because warm weather's finally on the way, and warm weather is a friend to natural gas. Hot weather is its mother. It wants that hot weather, so you get the draw out of that. Hasn't gotten it yet, but we're no longer in that crazy cold weather. If you're interested in our research, we'd love to put it in your hands. How do you get it? Go to our website, www.iraepstein.com. You'll see a carousel of free offers. Choose what you want. Be wise. Take one of our charting software packages for free. You get to hear the oral updates in the QT, and that's the one that I would be recommending you get. It works both on your cell phone, be it Android or Apple, and of course it's going to work on your computer. But you can choose for yourself, www.iraepstein.com. I'll see you all tomorrow.